battling the relentlessly negative doom and gloom news media. It's the Nick Stenger Show, coming to you live from the Stenger Family Office headquarters. It's your host, Nick Stenger.
All right, ladies and gentlemen, welcome back to the Nick Stenger Show. Bonus episode 193. Here we go. Have you even said sorry once? That's the title of this week's episode. And we're going to talk about why the Wall Street doom and gloom strategists should say sorry. They owe everybody, including you and I, an apology for their horrible doom and gloom calls and trying to trade and time the market. I guess we can't be too surprised by this because they are strategists, they are timers and traders. But they get the most headlines and they scare the pants off of everybody. We're going to get into it in 1 second, but I do want to share a couple events that are coming up right around the corner from today. We've got the live episode taping of episode 200 of the show. You can't miss this thing. If you've been a longtime listener of the show, you've been coming back each and every week. We so appreciate it. So reach out to Katie the Greek. Give her a call, 630-923-7883. This is August 26th, downtown Naperville. Don't miss the live taping of episode 200. We're about halfway full. This thing's going to fill up here pretty soon. So if you want to come, give Katie a call, 630-923-7883. And then moving along here to Investor Day, right around the corner, if you can believe it, October 16th and 17th. And we finally, just today, sent out the very first email invite. You got the mailer from us a few weeks ago, and now we sent out the email. So we're already getting tons of RSVPs today. I believe last time I looked, we're about 50% full. This thing is going to be full before you know it. So if you want to attend, make sure you get on the invite, call Katie, and or scan the QR code on the screen, but you absolutely have to come to this thing. It is our highest rated event of the year, Investor Day, October 16th and 17th in Oak Brook. All right, let's jump right into it. S&P 500 back to a record all-time high almost, 62.68. Just a few points away from where we were last episode, which was Monday. And I think you're going to continue to see this. You're going to see the market climb this wall of worry. Are we going to bounce up and down a few percentage points? Sure, absolutely. But I do not think, and I want to be very clear about this, I don't think you're going to get that 4,900 point buying opportunity that you had during April when everybody panicked. Now, what's the title of this episode and why are we talking about the strategists and saying they should apologize? Have you said sorry once? Because look at what these strategists did. Now, I have all the receipts. I've done all the screenshots. I have the doom and gloom folder. You know about this, where we save all the nonsense that these people put out so that you can go back and look at this stuff later so that next time you're in a correction, next time we're in a pullback, you can say, all right, these people are consistently wrong. Because if you're going to listen to somebody with your big life savings, your life's work, and you're going to make an investment decision based off of it, maybe you should ask yourself the question, what is this person's track record? Have they consistently delivered results? And if the answer is no, then why are you listening to them now? Here you go, Citigroup. April 14th, Citigroup downgrades U.S. equities at the low, cuts its S&P 500 target below 6,000. Here's a couple more. Bank of America, Oppenheimer. This is just a week before that. April 7th, Bank of America, Oppenheimer were the latest on Wall Street to slash the S&P 500's annual target at the low. Don't forget this. This was at literally the absolute best time to be buying equities. April 7th, I could be wrong by a day on this, but that week was the absolute best week to buy equities. That was the market bottom. That's what we said internally marked the market bottom. Here you go. UBS cuts its S&P 500 target and GDP forecast for 2025. This is April 8th, just a day after those other firms cut their target. It's literally a bunch of sheep just going off a cliff together. So if you remember back to what your mother taught you growing up, are you going to do it because everyone else, if everyone else is jumping off a cliff, are you going to do it too? The answer for Wall Street strategists is yes. We are 100% just blind leading the blind, going to go off the cliff together, and we're going to ruin the investment plans of literally millions of Americans. So why am I so amped up about this? Why am I so fired up about you should say sorry? The strategists should say sorry to us because they literally cost investors who weren't on a disciplined goals-based plan billions of dollars. They owe us an apology. They never, ever, ever say sorry. They go on CNBC on Monday. They're bearish. By Friday, they're bullish. The next week, they're bearish again, and then they're bullish. And they change their tune literally every other day just to try and fit in with what the herd is saying. It's absolutely insane. Nobody's got a backbone. Nobody's got any spine or steely eyes. Nobody's actually got a plan in this world of strategists. Now, there's been a couple strategists who have been spot on and done a good job, but those are all the strategists who also manage portfolios. So a couple strategists who've done really well. I'm not telling you to go buy their funds or anything like that, but I just want to name some names of the ones who have done it right, so you know it's not all bad. But look at Dan Ives, has kept people on their plans. Tom Lee, Fundstrat, has kept people on their plans. Look at Brian Bellski at BMO Harris. But all those guys have portfolios too. And on top of that, they're strategists and they're on CNBC. But for the ones who don't actually manage money, it's literally whichever way the wind blows that day. Oh, the wind is blowing to the east. I guess we're going to be bearish now. Well, they don't understand how damaging that is for investors who see the headlines. And that's all the media needs. Just a little snippet, enough to put a quote in. Oh, JP Morgan is bearish. Morgan Stanley is bearish. And everybody starts to panic when they see those headlines. Here's another one. April 15th, here comes another Wall Street S&P 500 target reduction. Stagflation risks are rising. These are the headlines you have to watch out for. So why do you need to subscribe to this show? Why do you have to come back here each and every week and get the clarity and confidence? Because this is what you're up against. This is what scares the pants off of people. And if you take this bait, if you go with the narrative and you sell or you do some really bad investment decision, all it takes is one, and it can mess up your return for 5 years. It could even, if it's bad enough, it could mess up your return for a decade. You cannot time this thing. I have people say, Nick, I'm sitting on a chunk of cash. I got 300, 400, 500 grand ready to go. Should I get it to work at an all-time high in the market? And I say yes, because if you have a long-term goals-based plan and you're not going to need that money for 18 months, if we can get that thing growing for you and in the market, statistically, the market will go up over the long run. Then on the opposite side, I have people say, Nick, I had this call with somebody yesterday. Nick, I'm 62 years old. My investment timeline has changed. My horizon has changed. My goals have changed, and that all is true. Should I go ultra conservative? Do I need to be a 50% bond, 50% stock portfolio? And I say no, because look at the math of the long range portfolio. If you're 62, and let's say longevity suggests your lifespan might be 92 years old, you got a 30-year retirement ahead of you. If you go 50-50 on a portfolio, I can assure you in most cases, mathematically, that portfolio is not going to make it. It's not going to beat inflation. You're going to have 50% of your money in an asset class that just barely breaks even with inflation nominally. And then after you take out the taxes, it might even lose money to inflation. So the only reason that you would change your investment plan, the only reason you would buy something safe and secure in the portfolio is if you have a specific goal. Now, goals are critical. So don't hear this as Nick is saying put 100% in equities and don't ever worry about risk, because risk is one of the very first things we want to deal with. But the way we deal with it is from a goals-based perspective, not a risk-based perspective. It's not about how you feel today. It's not about what these strategists are saying. It's not what Jim Cramer is talking about on CNBC from day to day. It's not what you read on Twitter. It's not what your brother-in-law told you about the market. It's not what Donald Trump is doing or isn't doing, or Congress or anything like that. It's your goals-based plan. So if you have a goals-based plan and you're 62 years old and you're looking at retirement, or you're retired already, what I would tell you is, what do you need for a year of living expenses? We factor in the taxes. We multiply 1 year of that, what you're going to distribute from the portfolio, and multiply by 3 to 5. If you're ultra conservative, go 5 years. If you're more moderate, you could go 3 years, and then that's your safe and secure money. Here's the key, though. You never, ever, ever, ever go risk that safe and secure money. That's the secret sauce of the goals-based plan. Don't go risk your 300 or 400 or 500,000 in the plan. Keep it really safe. U.S. 30-day T-bills. Everything else, that's where you go buy high-quality companies. It's not rocket science, but people have overcomplicated this. And if you're sitting in one of these modern portfolio theories, portfolios, or one of these target date funds, or one of these things where you just have 1,000 mutual funds and you have no idea what you really own, and you got 6,000 companies in there, which, by the way, if you got 6,000 companies in your portfolio, Probably about 80% of them aren't even profitable. So I would question why you're doing that in the first place. But you look at this portfolio you may have, and if it's not been built with critical thinking as a goals-based portfolio, you could be looking at an absolute mess. And then when you see one of these headlines, you forget what you own. You forget what your plan is and you panic. So what we want to do at Stenger Family Office is make sure you know. That's why we're back here every single week doing this podcast. That's why we do these events. That's why we put so much time and effort into educating our clients, because we want you to know what you own. We want you to know what you got. We want you to be as aligned with us on the philosophy of the plan, because we know when the going gets tough, the tough are going to get going, and that the people on a plan are going to be able to stay on that plan over time. The plan is only as good as your ability to execute on it. That's the key. So why am I amped up today? Why am I fired up? Because these strategists should owe Wall Street an apology. They should owe Main Street an apology. They should say sorry for costing people billions and billions of dollars of lost investment return. And by the way, in a lot of cases, the institutional money now has underperformed Main Street investors. Institutional investors dumped NVIDIA at the low in 2017, 2018, 2019, and said it was overvalued and there's no way it was going to keep going up. And retail investors, our clients, said, wait a second. No. NVIDIA is this incredible company, and here it is today at a brand new record all-time high. So just because you've got this fancy brand name behind you and you're a strategist on Wall Street doesn't mean that you know anything more about investing than people like our clients who understand good companies. Who have been some of our best investors? It's been people who understand fundamentally that companies are a claim on real assets. When you're buying Costco and Home Depot and Procter & Gamble and AT&T and Apple and Microsoft and all these phenomenal large cap U.S. high quality companies, and you understand them on a fundamental level, you understand that you own a piece of their operating business, maybe not a lot of it, but you own a piece of it. You have a claim on their assets. Then you understand that at certain times, those stocks are going to go down. Now, NVIDIA has been through 50% declines just over the past 15, 20 years now. And that was every single one of those was a scary time where people might have panicked out of their NVIDIA stock, for example. But if you just stayed on your plan and you held that stock, look at your returns now the past 5-10 years. It's been absolutely incredible. So how do you get rich in the stock market long term? You stay on a goals-based plan and you use patience. It's not complicated. It all comes down to behavior, and that's why we tell you subscribe to the show. If you haven't done it already, subscribe here on YouTube, Apple, and Spotify. Come out to our events. We want to make sure we coach you on your long-term plan. Thanks for being here. If you're a strategist, feel free to call me and give us an apology if you'd like to. We'll see you next episode 194.